With price continuing to remain relatively flat after the gap down, the Fibonacci fan will be left in the same position as last time, while the trend-based and regular Fibonacci time zones will be centering on the upswing after the gap down. Then we add a Fibonacci spiral pointing down from the March 8th highs. It would be important for price not just to hold above 1030 but to begin closing over 1110 as it moves through the next interval marked by the lines 0.618 and 8. That can form a minor upswing to maintain this now well-defined gap down range. A more significant reversal cannot be declared until price crosses over this next fan line and crosses up through the 1250 to 1340 range. Otherwise, a short run-up like in early March will just see continued pressure over the low $10 range in the broader context. If that double-digit boundary were to be broken through, 845 to 930 could be a possible next major long-term lower boundary. For more on these Fibonacci methods and other technical analysis topics, check out the hundreds of instructional videos already on the channel. Now to Ford stock chart, which has recently progressed this bullish continuation. With these clear structures, we can actually use the same set of Fibonacci tools as the previous chart. In the short term, attention will be focused on whether price can clear over the 1350 level and the spiral that points up from the bull hammer candle from March 18th. If so, then this steeper incline can be maintained up to the $14 boundary, nearing late April with the Fibonacci time zone lines marked 0.618 and 5. If price hasn't decisively closed over 1350, reaching that next time interval, a retracement becomes more likely, and that could follow the curvature of the spiral. In such a case, it would be important for price to hold over the 1280 level for the larger uptrend to remain intact.